What's going on, everyone? Welcome back to Courtside Financial. My name's Obi, and if you're new to the channel, make sure you hit that subscribe button so you don't miss out on any NIO videos that are coming. And also make sure you hit the like button because that really does go a long way in helping out the channel. So it's currently 12:03 p.m. Eastern Time here in Michigan, and NIO Stock is trading at $12.38, up 2.6% for the day. So with that out of the way, let's get into the video. The first thing I want to talk about today is an article that came out from Investor Place. The title is NIO Stock Will Trend Lower Until the Company Can Get Profitable. So I read this whole article, and the headline makes it actually sound more bogus than the article actually is. But for me, the article still is kind of off in my opinion. You look at Tesla, they're finally just having their fourth consecutive quarter of profitability. So I want to go back and look at what William Li said in an interview with Bloomberg last year really quick, and then I'll give you the rest of what I think.
It took Tesla 16 years to become profitable. How long is it going to take NIO?
You can't ask a 4 or 5-year-old toddler to make money. I think it's quite difficult. If you look at Tesla, it has been established for 16 years. NIO has only been established for over 4 years. I'm sure that we don't need over a decade to make profit.
So clearly, going back to that interview with William Li and Bloomberg in 2019, he says that they will be profitable in less time than Tesla. Now, why do I believe this to be true? I believe that this is going to be true because obviously we see that Tesla and NIO, in terms of vehicles delivered, since that's what most of these analysts only want to look at the time, are positively correlated. William Li said earlier this summer that when Tesla sales increase, they're actually seeing NIO sales increase too. What has happened here is that Tesla has actually went ahead and they've kicked down the door. They were the first ones to do it. They were the pioneers. So they've created this opportunity for people to start making electric vehicles and start to grab some of that market share, and it's obviously benefiting NIO as well. So if NIO succeeds, they will be profitable in less time than Tesla. That doesn't make them any better than Tesla. All of these legacy automakers wouldn't be trying to make electric vehicles now if it weren't for Tesla. They created the market opportunity. Now, as far as the margins that he's talking about, if we go back to the Q1 earnings call, we definitely heard them say that they're expecting to have some really nice margins come Q4 this year. Deliveries have been increasing month after month, quarter after quarter. So all I can do is believe them. If you actually watch that entire interview with Bloomberg too, they were able to accomplish most of the things that they've said. You know, he said that they were going to be able to raise funding through the entity NIO Capital, and they did raise funding through NIO Capital this year. And that deal with the Hefe government, that's something that helped keep them afloat. And this is actually at the time when the share price had sunk by a lot, and everybody was kind of scared of NIO. Even myself as an investor, I was pretty scared. But I actually watched this interview and I saw how calm William Li was. And he said there's a short selling mechanism, and American investors don't really understand the long-term value of NIO. So then I thought to myself, maybe I'm not seeing it right. Maybe I'm going to take a chance with this one. So I continued to hold on to my shares, and then things began to turn around. So honestly, all these analysts, they're eventually going to catch on to the fact that it's not just about having better margins on the vehicles sold. There's so many other aspects of NIO that come together, which even the president has said in a story that I covered last month, that it's their products and services that are also going to come together to help them reach profitability faster. We can see them moving globally in 2 years. They need to be doing double what they're doing right now to be profitable. That could be expected to happen in 2 years. But analysts clearly don't want to be fair with this stock. There's a ton of companies out there that aren't profitable, yet the stock price continues to rise because people buy into the stock on future expectations. And I think that's what's happening here. I don't know if it's going to go down. Obviously, it's fluctuating up and down. I don't really care what happens in the short term. I'm a long-term investor. And that's all I have to say for Investor Place. Investor Place were the same people calling NIO a gamble. Investor Place were the same people who turned around and eventually said that NIO might be worth the gamble. And now they're saying that the share price won't increase until they're profitable. It's just a whole bunch of noise. Just do your own research, come to your own opinions. This is just personally how I'm going about it. So the next thing I want to talk about is NIO getting into the used car market. This is actually something that I think is going to be really good for the company, because obviously when people buy cars, eventually they might want to sell them, but now you can do it through NIO's app. They are the ones selling the used cars. Obviously, with them selling it, they're able to double dip on the revenue. With them already getting revenue from selling the car in the first place, now they're getting revenue from selling the used car. And then if there's a bigger used car market, that means more people driving more NIO cars. There's going to be a bigger brand presence, more NIOs on the road. With the used car pricing, that's going to make it more accessible to more people. So more people will want to drive NIOs. Overall, I don't see how this could even be a bad thing. So hats off to NIO for making that move. Last thing I want to talk about is the Hycaan 007. This is a vehicle made in a JV or joint venture with GAC and NIO. I don't really know what's going on with that right now. The pricing for the 007 started at $37,000. And that was after subsidies. I believe they actually knocked about another $300 or $400 off the price of every vehicle from the starting to the fully loaded one as well. So that's kind of like a little sleeper pick. This vehicle, I don't know how the revenue is going to work. I know NIO is going to be handling deliveries of it. So we're going to end up seeing how that impacts revenue, how that impacts deliveries eventually. Hopefully sometime soon. I hope someone asks about that in the Q2 earnings call, and I think that this could actually be a good thing for NIO. I hope it's not something that spreads them too thin. That could also be something that happens with this, but it's just something that a lot of people aren't thinking about right now. So don't forget about the Hycaan model and the joint venture that NIO is working on with GAC. So that was going to be it for this video. Thank you so much for watching. Make sure you hit the like button, make sure you hit the subscribe button, and leave me a comment down below. I want to know what you guys think about NIO. I want to know what you guys think about how analysts are thinking about NIO. Do you think NIO is going to go back to $7? I honestly don't care if it does. If it does, I'll buy a lot more. But anyways, thank you guys so much for watching.